Hi everybody, and welcome to today's presentation where we have the pleasure to present Inderes. To help us through, today we are joined by CEO Mikael Rautanen. Today's event will cover the Q4 full year results, take a sneak peek into 23 and the expectation, and I think you will also touch a little bit about your new strategy on the Nordic region. For full disclosure, we have a partnership and you have an ownership in HC Andersen, but I think that will actually be shown on the cash flow slide. So I think that is covered. As always, ask questions in the box down below. Do it during the presentation. I will see if it fits in, or else we will catch all the questions in the end. But for now, I think I will hand the presentation over to you, Michael.
Thank you, Michael, and thanks for having this call. And good afternoon to all our shareholders and all our shareholders outside Finland. And there are not yet many, but hopefully an increase in the amount of foreign shareholders as well. Let's dive into last year and the Q4 numbers. How did it go? The full year in a nutshell, from a number perspective. We are not happy with the numbers. Revenue growth, well, 14% is okay, but it's not what we aim for going into this year. I will go more deeply into the reasons behind the growth slowing down. Profitability, it helped. We're not happy with that either. So that's from the numbers perspective. Then if I look at what kind of progress this company made during last year, there are many things that we can be very happy about and we can be proud about. We did the IPO 1.5 years ago. We said that we're going to make certain investments. We went forward with those investment plans. Even though the market turned out a bit more challenging, we went forward with them. And now going into this year, we have laid out pretty good and solid foundation for building this company on a Nordic level. We have been a company working in Finland for 10 years. We've been kind of like chained with the limited market that we have. And now the addressable market of this company is it has been multiplied. And we already have quite solid customer base on a Nordic level. We have built our product offering and product portfolio in a way that it's more mature and ready to be rolled out on a Nordic level to this customer base. So the numbers not satisfactory, but what we did during last year that builds a foundation for upcoming years. I have a good feeling, and of course, one good indicator is also that the recurring revenue grew by 25%, even in this kind of market. I think that's a good indicator that we are running a solid business model here. Reasons behind the weakened profitability. The biggest one is our investments that mainly go through the P&L. We implemented them according to plan. So out of that 1 million, over 700,000 is through P&L. Our software development expenses that we don't capitalize to balance sheet, they also grew from 0.7 to 1.5 million. Then we struggled going into this year. We struggled and failed a bit in sales in the virtual events business in the customer segments outside listed companies. That hit our first half profitability quite significantly, but on that side, we're back on track. So this is the platform we are building. We've been building this for the last decade, and around this strategy, we continue to build this company. So on the listed company side, very solid progress, almost 300 listed companies as customers. In that figure, there's approximately half of the clients from our acquisition, Streamfabriken and Financial Hearings, because of the way we calculate it. In Q1 and Q3, the rest of the customers will be also included into that number, and it should go to around 400. So pretty solid customer base already on a Nordic level. The number of our community active members, so we measure the yearly active members as one KPI for our community, it came down. We are not seeing that the community members would be like abandoning us and switching to other services. It's more of the overall market situation, starting investing and discussing about stocks is not as was not as cool as it was in 2021. But overall, the healthiness and activity and engagement within the core community that we have a very, very good feeling about that. Going into each business area, so we have the 3 business areas: equity research, events, and IR solutions. With equity research, last year really demonstrated that this is a very solid business model, even in a turbulent environment. We continued strong growth. We continued strong profitability. The team did excellent work. So we actually landed the year quite close to what we were expecting going into 2022, despite the market being completely different from what we expected. So we are still winning new contracts despite the sluggishness of the IPO market. We have started to build our team in Sweden, and the churn in existing clients has been like, there's nothing exceptional there. It's mainly the takeover bids and buyouts that affect our customer churn.
So, Michael, was that one as a steady base over the year, or maybe here in the end of the year? I'm more talking about, what natural growth are you taking with you into 23 alone from the base you build up bigger this year?
Not sure if I got the
right. Has it been a steady inflow during the year or more in second half? It's more which growth you have built up for the next year by having this recurring revenue stream here. If it came in the end, it will have a bigger effect next year.
Yeah, I would say it's mainly steady inflow, and the steady inflow has continued going into this year. In the beginning of last year, we had to say to many clients that we cannot start your contract before 6 months or so, because there was so much customers coming in. So now it's kind of like a bit more normal situation here.
Perfect.
Yeah. On the events business, so actually after the acquisition, this is becoming our biggest business area in revenue terms going to this year. Here we struggled a bit. I mean, if you look at the big picture, 3 years ago when COVID hit, we were very good in changing and adapting to the changing environment as customers wanted to go full online and full virtual events. And we were able to catch that wind quite nicely. And during the kind of like lockdown and COVID conditions, we doubled the business. Well, starting 2022, the market changed quite a bit again, and we had to adapt to the changing market environment. Now it's going more into hybrid events. Of course, a lot of online events as well, but kind of like hybrid is the new thing, and we have adjusted our strategy, adjusted our offering. We have built such an offering that we can do really big AGM Capital Markets Day productions. Like here you see Tietoevry's Capital Markets Day from Stockholm that was completely produced by us. And we're seeing really strong traction in that area. So extremely positive customer feedback. And of course, it's also us shifting from being the technical producer into taking care of the whole event production end to end, and that is kind of like increasing the revenue per client that we are seeing in this business area. On the other hand, some customers, given the market situation, are looking for cost savings and more efficient ways to do these events and communications, and for that we do have the software-based solution. So So it's a lower margin but lower revenue but higher margin business for us. So we do have also alternatives for that side of the business.
And if I look, during a hybrid event, I guess that's a higher revenue, but does the earnings follow with it? The margins. I guess it's running, not in the studio, a big event as we did in the COVID times, but actually running it out in the environment of a company, both online and a hybrid event. Is that bigger revenue, but is it also bigger margin for you, or do you have a higher cost producing that than in your studios?
There's higher outside cost and service cost around it. So yes, it's not that scalable and not that high margin as with the software sales, obviously. But it's also an area where we clearly have an edge, where we are really proud of the productions that the team is doing and the customer feedback we are getting. And that's of course going to bigger and bigger customers. This becomes more relevant. While then when we go to small cap companies, micro cap companies, there we need to have these really standardized hopefully software-based solutions that we can help the customers to do their communications in a really efficient and cost-effective way.
Perfect.
So that's the strategy going into IR solutions. So here, strong growth, but negative profitability, mainly because of the software development expenses increasing quite significantly. One part of that is us renewing the whole Inderes platform that investors see. If you go to Inderes.fi, that's running on our old platform that has been built for Finland, and it's based on old technology. If you go to Inderes.pk, that's based on the new platform that we are building, and that is going forward every day as the team is working on it. And that new platform, and which is built on modern technologies, will enable the Nordic approach that this company now has. So that's kind of like building the foundation for Nordic growth. Then in addition, we have been developing the investor relations software package. So it starts from investor websites, the modules for investor websites. Then the press release system is our latest launch there. Then of course the HCM software, and then video sync software for doing the quarterly presentations. So if the customer wants to do it with a cost-efficient do-it-yourself solution, we have software-based solution for that. So that's kind of like the package we have built. It's a very strong package. So basically a small mid-cap company IR can buy all the services and all the software they need for running a very, very good IR and good service for the owners and the services related to those. So I'm pretty proud that we have built this business in 3 years, basically from scratch. And of course, we continue to build the product portfolio and the offering, but now we already have decent customer base and growth in this business. So it's a very natural fit to our product portfolio. And on the HCM solutions, I would say last year was a really strong year in the HCMs in Finland. We increased our market share, and looking at the spring sales, it looks good. Then on the numbers, a bit more detail. I won't go too much into detail here, but well, overall, last year financial statements. So, like I said, 14% growth. There's a very small piece in that from the acquisition in Q4 numbers, and well, profitability we already discussed. Then if we look at Q4 in more detail, now I would here note that this is a bit exceptional quarter because we did in the middle of the quarter, we did the quite big acquisition that a bit kind of like messes up the numbers because we took them in the middle of the quarter, and in this business December is the weakest month of the year, so we took in the month with the lowest revenue. So that's why for this quarter the acquisition as such had a negative impact on profitability and slightly positive impact on revenues. How will Inderes look post acquisition? That you will see in the upcoming quarters. So I wouldn't draw too much conclusions based on the Q4 as such. It was a very busy quarter for the whole team with the acquisition, but yet I'm happy that the operations continue to run really smoothly during that time. On the balance sheet, we did the IPO 1.5 years ago. We raised 5.4 million euros. After that, we have done over 10 million investments, capex, part of them with using our own share. And despite these significant investments, we still have really strong balance sheet. So that's the key message here. Despite significant investments, we have maintained healthy balance sheet, healthy cash flow, and we are in strong position from balance sheet perspective. And with the cash flow, so 1.5 million operating cash flow, then with the outgoing cash, so acquisitions, part of it was our partnership with HC Andersen in Denmark. Part of it was the Streamfabriken Financial Hearings acquisition, and then some capex related to our studio upgrades in Helsinki and studio investment in Stockholm. So we are opening up our new studio. There will be first productions in the upcoming weeks. It's a very good central location. So basically we're there replicating the same concept that has been extremely successful in Helsinki. Dividend. So we are, the board is proposing a slight increase to the dividend, which is in line with our payout policy that we have communicated for the market. I know and understand that some might see that, well, why are you increasing the dividend while your earnings per share has gone down? Let me give a bit color on that one. So if I look at our cash position, does that limit us from paying dividend? No. If I look at our balance sheet, does that limit our payout? No. If I look at our cash flow and future investment or capex needs, will that limit our payout? No. So basically there is no strong reason to let down on the payout policy we have communicated during the IPO. So that's why we are proposing a small increase to the dividend, and that level of payout is still less than what we did operating cash flow last year.
And maybe I can ask a little bit about that dividend policy. It doesn't go on the yearly result. It goes on the. Can you give a little bit what the dividend policy is by you, just so we understand it?
Yeah. So the dividend policy is to have annually increasing total payout.
Okay. Yes.
And it includes dividend and share repurchases. And it should be annually increasing. And the logic there is that we want to drive healthy cash flow, growing cash flow, healthy cash flow business. So that's the
There's no target on how much it needs to rise per year or something of the accumulated. It's just that you have promised to raise. Absolutely.
And I would say there will be, and it's quite natural that companies have volatility in their earnings annually. But the target is also to have stability on the payout annually.
Yeah, perfect. Thank you.
So and then on the outlook, I've gotten some feedback that it's cautious regarding the revenue growth and profitability. Well, last year was a bit turbulent year. Maybe that made us to kind of like start this year with given the market uncertainties, to start this year with fairly cautious outlook, and that's what it's kind of like based on, a bit on the background. So overall, the market demand situation is we would say it's stable starting this year. We have solid track on the recurring business, so that's going well. The research contracts, we have quite good visibility on the AGM season. That's pretty significant revenue driver for this year, and also in the events business, there we have the least visibility going forward. But the first half is looking pretty solid. So overall, there's kind of like no place on fire that for which we would need to kind of like put out a really conservative guidance. It's starting this year, things are looking pretty well, but we also need to acknowledge that I mean, the last 3 years there's been so much turbulence in the market, in our business, both up and both down. So we need to take into account that one. For the second half, of course, in events business, like we saw last year, it's there we don't have such order backlog or recurring element that we could be predicting it. So that's why start off with fairly conservative estimates. And
there's actually a question here, because there's a question and elaboration. You know, if you take the Swedish acquisitions and put it on top, you know, there's not much growth anywhere you are guiding. And I have now listened; it's a cautious guidance. So there's also questions: do you expect to grow the Swedish revenue you bought? Do you expect to grow in Sweden, or is this a consolidation year where you just want to keep the customers in and then prepare to grow? And put them on you know, higher revenue or better products in Sweden, upgrade those customers. But do you expect to grow that this year, or is it the middle year before you will target to try and upgrade those customers?
Yeah, so of course it's good to note that this is the low point that we are saying here. So it's above 17, it's above 9.4. So that's good to keep in mind. With the Sweden, yes, of course, we have the ambition level is to roll out over time the full service offering, and yeah, we did see a lot of growth opportunities in the Sweden business, both short term and especially long term. How will that play in on a quarterly or short term level? Kind of like. That once we go into this year and our operators start to integrate, we will give more color on that one.
And maybe the last one, and I know this is probably the hardest one, your expectations for the IPO market, because that's a natural growth driver for you with the full package. I guess that's where you will really see if the IPO markets take up. Where are your expectations? I know it's early innings. We are starting to see maybe a little bit what do you call it in English? We are seeing some of the a little bit of a spring, but we don't know whether it's going to be summer. So your expectations on the Finnish market regarding IPOs?
Yeah, so here we are expecting that it will remain quiet.
Okay.
So if more IPOs, then let it surprise positively. And looking this year, the talking with the entrepreneurs and the other advisors, for some reason I haven't seen much activity despite the stock market picking up. But I mean, going into April, May, we'll probably see if there comes some. I mean, last year there came some IPOs in Finland, even with the challenging market, and some of those companies were successful with their IPOs despite the challenging market, and that's something they can be really proud of. But yeah, I in the big picture, starting last year, there was a huge amount of companies in the pipeline, and I don't believe that all those projects are cancelled. They are kind of like waiting. They have the button there, and they are waiting to press the button. So let's see.
Yeah. But the main message is here, of course, we don't know that, but you haven't actually included a lot of that in your guidance. So that was that correctly understood?
Yeah.
Perfect.
Then going into our strategy, so this is one of my favorite slides. This pretty much describes the big picture of Inderes. First of all, this is the market penetration. This is not our market share. We are a company that likes to build our own market. So for example, with the equity research business, we didn't enter that market and steal the customers from other competitors. We created that market ourselves. So that's very close to our philosophy and how this company works. 4 years ago, we were a company, if you look at the left-hand side graph, we were a company with only the equity research business. And in less than 4 years, we have transformed into having the wider product offering, and at the same time having really strong market position in almost all of those product offerings. Of course, that means that in Finland we have reached, we have been approaching the growth limits. It's a limited market with limited growth potential if we don't have a lot of IPOs. Of course, we still do have room to grow in Finland. Now, switching to a Nordic perspective, which is the process we are doing, it's very much a kind of like a mental process as well, mindset thing. It turns this company back into being the small market challenger, democratizing information on a Nordic level. Of course, we can be really proud that we have already extremely, with financial hearings as Streamfabriken, we have extremely strong business on the quarterly earnings events business already. But the key thing here is that we are kind of like on the early stages of the Nordic expansion here, and it's a really exciting journey for the whole team and organization that we have here. So this is something that gets me super excited waking up in the morning and going to work. The basic strategy will remain the same. The simple model, we built the listed company customer base, and then we built the community. I would say on short run, on Nordics, it's more about building distribution and capabilities to reach the relevant audiences. And once we get research and more engaging content, that's where the community building starts. And then we continue to build solutions that help both the listed companies and customers to understand each other and facilitate the information flow between the two. long-term objectives, so 30 to 50. That's the financial targets. We failed it last year. Going to this year with the acquisition, it's obviously quite likely, or looking at the guidance, you can say it's quite doable. How would I say? Of course, this year will be very much building the foundation, so that going into 24, 25, even with the organic track, we can stay within that range.
Yeah, because I actually have a question there. I can see that you can catch it this year, but I guess when you made those targets, you maybe were not that much in the M&A mindset. So
yeah,
you actually want to do this organically. You know, I know it's also targets that doesn't need to be fulfilled every year. Is that correct? But it should be over a business cycle. So no problems. But yeah, it is your objective to try and do this without M&A, right? The 30 to 50% target here on revenue plus margin. Is that correct?
Yeah, that's kind of like the ambition level. Doesn't exclude M&A, of course. We can use M&A like we do now. I think this M&A, for example, this latest M&A is basically a tool for us to do the transformation. It's not just acquiring one business unit. It's one significant transformation driver for this company.
Yeah.
But yeah, the philosophy around this guidance is or objective is also that if we are in this range, that would indicate that we are first running healthy, good business. That's what we want to do. And it should also indicate that we are good in what we do. We are excellent in what we do. Those are the two things we want to do. We want to do things where we can be excellent and we want to drive healthy business. If we are not in that range, or we are consistently below that range, then I would say probably we are a mediocre company doing mediocre things, and that's not what the ambition level is in this organization. So, and from that we can jump on to our infinite target. So rather be great instead of being bad.
No, I know it's not infinite as a target, and I do understand that choosing an acquisition and building something yourself is both investment, right? So why can't you also have the upside by the investment? So I do understand. It was just to get your feeling on whether you would also achieve it if you are not aggressively on the M&A targets also in the future. Perfect.
Yeah, and I don't kind of like want this company to be pushed in a situation that we are forced to do acquisition just to get into the range. That would be kind of like nonsense. So that's the philosophy. And then teaser, please save the date, May 26, our first Capital Markets Day. So hope to see you there. We will have the event in Helsinki, and of course online, naturally. And let's see. Probably the event will be hosted also from our Stockholm studio. So probably you can join either Stockholm, Helsinki, or online.
And if I understood you correctly, you would dig a little bit deeper into the strategy on how you are going to expand and use the possibilities you got in the Nordic region. Is that correct?
Exactly. So I just showed the snapshot of the Nordic big picture. On that CMD, we're gonna dig more deeply into how we will execute on that opportunity. Of course, it's not long since we made the acquisitions. Now it's our time to do the strategy work during the spring, and hopefully on at the end of the May we have a credible strategy to present for the investors. So.
Perfect. There's a question here, Michael, regarding: do you consider a share back program also on top of the dividends, or are you still in maybe more an investing phase in the business than considering a share buy?
Well, with buybacks is basically if you look at the liquidity of the share and the rules around buybacks, it makes it very difficult to implement the buyback program with the current liquidity level of the share. That's something that should be noticed. But of course, besides that, I will kind of like leave all the capital allocation questions to the board. Yeah, we have a pretty clear payout policy. So.
And then lastly, a question. So I will let you off the hook there and direct it to the board. The community, you see a little bit of a slight decrease. I know it's a good reason that you know there came a lot of people in very speculatively, and when the market was not that funny, then they disappeared. Do you have any plans, initiatives to maybe raise that again? I know you will do the new platform. Are there other thinkings you are thinking on of bigger initiatives to try and again raise the number on the community, or is it not that important, the number? Are you again more focusing on the activity of the most active down there?
Yeah, the community team is very focused on quality and serving the community, and kind of like not finding there are many easy ways to inflate that number on the short term. Mm-hmm. So they are very disciplined in focusing on the quality instead of growth only. Of course, we have ambition to grow it, but the focus is on providing good service for the community, and that over time and long term will fade into growth in terms of community members. And yeah, so that's a bit more philosophical answer, but the short answer is that of course we have ambition to grow it in the long run, not only in Finland but also on a Nordic level.
Perfect. I think that was the last question, Mike. Thank you to you, and thank you to the audience listening in or seeing in. May everybody have a very nice day.
Thank you, Michael.